Why is corporate credit so important to small businesses today?
Well, one of the major things that businesses go through is liquidity. And every time we try to get money, if we need the money, they probably won't give it to us. So when we don't need it, they give it to us. If we build it on the corporation, that's a different story. On top of that, it actually is away from you. It's not on you personally. So it protects you when things are tough. And you get a lot more in corporate credit than in personal credit.
You know, it's really funny because first time I met you was, 9-10 months ago. And I remember you talking about corporate credit. I remember you talking about being able to buy vehicles on your EIN, things like that. And you and other people, you weren't the only one I heard that from. But just the way you put it and the way you talked about it, because, you know, I've grown a business, sold it, but everything was attached to my Social Security number, everything. And if anything would have happened, I know, man, that's on me forever. Explain real quick, what is the difference between personal credit, business credit, and corporate credit?
You know, Roger, you're not the only one that did that. I had multiple businesses. My first business was at age 23, actually. And I went through the same thing. Basically, there's three types of credit out there. There's personal credit. We know all about it.
You bet. Social Security number, start when you're right out of
18.
high school.
At age 18.
You get a $200 credit limit at Target or something.
Mine was $350, JCPenney's.
There you go.
I remember that. And they track every transaction we do. Good or bad, they reported it to TransUnion, Equifax, and Experian. And if those three say you're a good person,
right,
everybody loves you. If they say you're not, you start having trouble. Then we have ideas and we go open a business. You know, we have a trade. We become plumbers. We become electricians. We become whatever business we do. And we set up an LLC, a C Corp, an S Corp. And why do we do it? We do it mainly for three things: to look legit in the eyes of the world, because it's no longer Roger or Ramzi. It's a company. To get those sweet tax deductions if we have a good accountant, and we should have a good accountant. And number three, to separate our personal assets from our business. Because if things go bad, if this goes sideways, we don't lose our house. We don't lose our kids' college fund. We don't lose our retirement account. We don't lose our cars. And they call that business credit when we go there. And we get a loan. We get a line of credit. We get an SBA loan. And the first thing they ask us is our personal Social Security.
You bet.
And I remember when I first got my first business, a gas station, a few months later, I went to my bank and I said, I need a line of credit. And I had excellent personal credit. And they said, let's check your credit. I said, why? It's on the business. I said, that's the way they do it. Then they asked me for tax returns, personal and business. They asked me for a profit and loss statement. They checked
we've all been through that.
They checked every cavity in my body to see if they like it. And then they said, okay, but you have to personally guarantee. And we don't think about it, personal guarantees. But personal guarantees is basically saying, I'm putting everything I own in there. And they call that business credit. I call it combo. It's not true business credit.
Right.
See, there was a day in our life when we were happy to hear from the IRS. I know some of you sitting out there are saying, what's wrong with him? The day we got our EIN, that employee identification number, that's like the Social Security of our company. And like we build credit on our personal Social Security, we can build credit on the EIN. And why? That's corporate credit. And why do we do it? Because it separates our personal assets from our business. It protects us and our families.
And I love that. But I mean, personal credit is, you know, I look at my Credit Karma score. And I mean, I've seen it drop 100 points in a day. I've seen it rise 90 points in a day. And it's like, what's the deal? I made a payment.
Right.
And it blows my mind because it's a roller coaster.
Yes, it is.
And it's like, is it a good day? Is it a bad day? You know, gee, are they going to check today? Did I make a payment yesterday? It's like, it's crazy.
Right.
But then, you know, it turns around. I remember I got a credit increase from like 25,000 to 43. And I'm like, okay, I didn't ask for it, but it looks better on my credit history, so I get that. But the funny thing is, that's all personal. If I walk in and say, I want corporate credit, or I want a loan against my business, or I want to borrow money for my business, they still want to come back to the personal credit because, and look, I'm in the process of growing corporate credit, but it's not something that we start doing at the age of 18. It's something we have to think about. And it's not just somebody handing us a credit card application and saying, okay, gee, this is a great thing to do. Building business credit is really easy. Pay your bills on time. Don't use too big a percentage of the credit that you're allowed.
Right.
And make payments on time. And don't have too much. Don't apply for a credit card every other day. You're sooner or later you're never going to get any. Mm-hmm. Business credit is really tied to that.
Yes and no, in a way. Our personal credit was built automatically over time for us.
Okay.
See, with personal credit, every transaction, or most transactions we do, get reported to TransUnion, Equifax, and Experian.
Right.
So they know who we are and they can establish a profile for us. In business is different, or corporate is different, because it has to be done intentionally.
Now, hold on before we go. And on personal, just because you make payments right doesn't mean everybody reports. But if you do something wrong, everybody reports it.
Absolutely.
So
absolutely.
It's like a hard to win game sometimes. Corporate's a little bit different, though. Go ahead.
Corporate is a little bit different. It is more difficult in certain ways, but it's easier in certain ways. With corporate credit, less than 10% of transactions we do get reported to business credit bureaus. And yes, Roger, I did say business credit bureaus.
Right.
There are three major ones. There's Dun & Bradstreet, Experian Business, and Equifax Business. And less than 10% report. So think about it for a second. You're a business. You're paying your supplier. You're paying your credit card. You're paying all that stuff. And you're spending thousands upon thousands of dollars every month, but nobody knows.
Right.
So when you go to the financial institution, when you go to a bank, when you go to different places to get loans, they have no idea that you're doing all that. Why? Because nobody's telling them. Less than 10% report. So that makes it harder. Now, if you know which ones report, and if you can do it in the right order, that's when it's gold. That's when you can get it.
How long from the time you start a business should you start working on your corporate credit?
Day one.
Day one.
Day one.
And does that start with what bank you choose to put your money in? Does it anything at all like that have anything to do with it?
Now, in the beginning, it's all about how you look. And financial institutions are fickle. We all know that. They look at multitudes of things. Some of the things they look at sometimes don't make any sense to us, but they do to them. Think about it for a second. Your address, what does your address have to do if you're profitable or not? It doesn't. But if your address with the IRS is different than your address with the Secretary of State, is different than your address with the credit bureaus, that's a major red flag. Now, what happens to us? We start a business and we have an address. Then we move.
And most tradespeople start a business in their house.
Right.
I mean, we've got a van, we got a truck, we got a business.
Right. And we move to now we got better. Our business grows and we move and we forget to notify the Secretary of State. But we notify the IRS because we got to do the quarterlies, right?
Absolutely.
So now there is a red flag there. Some people say, okay, don't do it in your house. Go get a P.O. box. No, your house is better in the beginning. But eventually you need a professional office. And you know what's funny? I have one of my companies. I pay $60 a month on it. And it's a professional building. And by the way, I just bought a car on it 2 years into it. Now, how long does it take to do it? It doesn't take as long as our personal credit. Our personal credit took a lifetime for us to do it.
Yeah, I'm 60 years old. I've probably got over $100,000 available credit on credit cards.
Right.
Okay. And sometimes that'll scare the heck out of you.
It does.
But to think that I'm 60 years old, 61 if you're being honest, to get to $100,000 credit limit, my business, there's opportunity sometimes that $100,000 isn't enough to do what I want to do. How long would it take a good business, one that spends money? So, say, when I sold my plumbing company, I was doing $1 million a year, and we were probably spending $30,000-$40,000 a month every month on materials, on everything, office supplies, materials, vehicle leases, fuel,
Right.
materials, all kinds of things. A company that's doing $1 million a year, after a year or two trying to build corporate credit, what kind of credit limit could they possibly build for themselves?
Well, it depends. Are they showing what they're doing? Are they utilizing their expenses that they do every day to help them build it? Or are they just doing it like we always did, which nobody knows we're doing it?
Right.
So think about it for a second. If you're spending $40,000, $50,000 every month on expenses, if the credit bureaus can see you're spending that, the business credit bureaus.
Right.
We're talking about $600,000 now.
As a possible loan approval rate.
Well, we're getting about $600,000 you're spending, right?
Right.
So if we multiply it by 1, that's $600,000. If we multiply it by half, that's $300,000. You're proving the ability to pay. It's just we want to make sure that they see it.
But just because we approve it on our personal doesn't mean that they're going to approve it on our corporate.
Nope. Because sometimes minor things don't allow you to do it. See, in everything you do, from plumbing to construction to anything you do, you got to build the foundation. When you build the foundation, then you can do a lot of stuff. Well, you got to build the foundation of your business. What's the foundation when you're building corporate credit? It's your company's credibility. Think about it for a second. How does your company look in front of the financial institutions? Well, have you ever seen a model on the runway, male or female? It doesn't matter. They look perfect from every angle you look at. But if you see that same model early in the morning, they don't look the same, do they?
Might be a little rough.
So when financial institutions are looking at our companies, are they seeing a model on the runway? Are they seeing a model that just woke up? Or maybe a model that just woke up with a weekend hangover.
Right.
So we need to establish our credibility. And it's small steps that helps us look really great. And then we establish a relationship, financial relationship. And we should establish a financial relationship with more than one institution. Mm-hmm. I remember I got my first gas station at age 23. Age 24, I got a second one. Third one, I went there. I already established a relationship with my bank, and I was okay. I knew I was going to get it, and boom, the bank was taken over by another one. And everything changed. So it's important to have relationship with multiple institutions. Some of us want to work with major banks. Some of us want to work with smaller banks. We should work with both. We should have a regional bank, and we should have a national bank. We should work with both and build those relationships with them. But before we go and try to apply for a business credit card here or a business loan here, we need to set the foundation. See, these days, everything is electronic. So you put it in there. It goes into that electronic program. If something is missing, a minor thing, they kick it out. So you have to build the credibility, then you start building it. And when you build it, you have to build it in stages. See, there's different stages. You can't do it in different order. You got to do it in the right order. And you have to be intentional about it. In a way, when we look at it, it looks like the game is rigged against us. You know, small businesses nobody takes care of them. Even though this small businesses built this country. It's time for us.
And they're building it and repairing it every day.
Absolutely. Yeah. I remember during COVID, looking at it, the CEO on Wall Street didn't mean anything as the truck driver that was bringing the food in, or the plumber that is fixing that leak in the house. Mm-hmm. And we know what's important. It's time for us to level that playing field. It's time for us to give the things that we're supposed to have, that corporate protection.
All right, take just a second. Tell everybody who you are and what you do.
My name is Ramzi Sarkis, and I'm a business owner. I'm a business owner like you. I started my first business at age 23. I went into gas stations. I owned multiples of them. And then I sold them, went into different businesses. I built companies. And you know what? All my life, I always had to personally guarantee. All my life, I had to struggle every time I went to get funding. All my life, I never got what I needed. It's always less. And you know what? I considered myself an educated person, a smart businessman, and I didn't know about corporate credit. And what I did, there was a bulb that lit in my head. This is something that every small business person in America needs to know about. It's available to us. It's not like it's not available to us. It's available to us. We have to work a little bit to get there, but it gives us the freedom that we need to do. So what do? We help businesses like mine, like yours, Roger, build their corporate credit so they can get the funds they need when they need it with no personal guarantee or very little personal guarantee.
I love that because, and still the first time that I heard you say that, it blew my mind. How many small businesses that are out there, and I know this is just a guess, there's no way of knowing exactly, how many of them actually have good corporate credit?
There's about 37 million small businesses in the United States right now.
Okay.
99% don't. And it's not because they can't have it, it's because they don't know about it. See, if you don't know about something, you can't take the steps to get there.
Right.
It's time for us to do that. It's time for us to wake up and get that done. It's time for us to utilize what's available to us.
This video is sponsored by High Level. For your 30-day free trial, go to gohighlevel.com/Roger Wakefield.
And it doesn't take much to do. It just needs a little direction and utilizing what we spend every day in our business to help us do that. And it makes a huge difference because corporate credit is usually 10, 20, 50 times larger than personal credit.
Wow.
How many times we have businesses, they want to expand, they want to buy another truck, they want to have another crew to work.
Or another business.
Another business, another opportunity.
You bet.
I'll tell you a story that happened actually with somebody that we talked to. We talked to somebody in there, and they were so busy in doing what they were doing that they pushed it. You know how we do things.
Right.
We push.
I'll do that tomorrow.
Yes,
Yeah.
yes. And about 11 months later, she calls me, and she's all perturbed. She has a major competitor in her area. That's the only one that competes with her in what she does. And that competitor was getting up in age and wanted to retire. So he went to her and said, buy me out. She couldn't. A major chain came and took it over. And now she's competing with them and she might lose her business. If she took the time to start working and building that credit, she would have had those funds available to her and she would not face that. See, sometimes I hear so many businesses say, I don't need money right now.
Yeah.
When you don't need money, that's when the financial institutions want to give you money.
Oh, yeah.
When you need money, that's when they make it hard for you. It's important for us to plan ahead. It's important for us to plan ahead because nobody knows what's going to happen. Who predicted COVID? Think about it. How many businesses went out of business during COVID because they didn't have enough liquidity to survive 4, 5, 6 months so they can adjust to the new way of doing things? How many opportunities pass by us and we say, oh, I can't do it right now. We shouldn't wait till we need it. That's too late. We should build it now. Now, you asked me a question earlier. You said, how early should we start? Well, from the first day. Is it too late for us to do it? Well, we just started helping a company that's a 53-year-old company. So it depends. It doesn't matter where you're at, how long you've been in business. You can build corporate credit. Now, definitely, if you're a company that's doing $1 million in business, is different than a company that's doing 100 in business. Your borrowing power is going to be less if you're at 100, but that's normal. And your needs are going to be less anyway. So there is no time when it's too late.
You know, you said a while ago that you could get like 1 time, 10 times, even 20 times what your personal is. And that blows my mind. I mean, like I said, I check my credit rating on Credit Karma all the time.
Right.
And, you scroll down, it's like, oh, there's 10 offers here for you. You can borrow 100,000, 200,000, stuff like that. Right. And it's like, once you get good credit, once you don't need it, it's like you don't even want it. It's like, yeah, I don't want that. But to know it's there, to know that if something happened, I could be like, look, I can do this. And I mean, I've sold businesses and I've seen people, I'm going to call it bet on the come. I'm betting, I know I'm going to get this money in, so I'm going to go ahead and borrow this money now because an opportunity came along. And just to know things like that are available is phenomenal. It's like you said, when we don't need it is the best time to apply for it because you look good on paper.
Right.
When you need it and you go apply for it, they're like, look, things aren't going your way. We're not going to loan it to you right now.
Well, you get those mailings every day. And I know every business owner that's watching this knows this. You get these envelopes that say 300,000, 500,000, 200,000. And you know that's not true.
Right.
And then you reach out to them. And the rates are so predatory. Why?
Yeah, they're loan sharks with a mailing list is what they are.
Right,
right. I get that.
We don't need to deal with that. I've seen so many businesses struggle sometimes and do it. You need to be ready, and it doesn't take much to be ready. It's just doing the right things, the right steps, with the right guidance, with the right direction, and you get there. And it's a game changer. And I mean it is a game changer because it gives you the ability to do so much without worrying. Think about it for a second, Roger. If you're not personally guaranteeing, would you take a little bit more chance?
Oh, yeah.
If you're not personally guaranteed, would you think bigger? If you're not personally guaranteed, would you buy that truck and get that new crew? Would you buy that new tool that you've been waiting to do? Mm-hmm. Or would you advertise more so you can have more business? You would, because you're not personally guaranteeing. And it's available to you if you work at it.
Well, it's funny because most small businesses, and look, in the trades right now, venture capitalists are buying up the trades businesses. They're buying them up across the country.
Right.
Because it's almost recession proof. People are going to need heat, cooling, plumbing, electricity every day. You're going to need it.
Right.
And when that system goes down, you need it fixed. When you're building a building, even during COVID, construction was allowed.
Right.
Well, I understand we need plumbers and HVAC techs and electricians because people are at home. And if their sewer's not working, their electricity isn't working, they need somebody. I get that. But we were still building buildings. They're like, nope, plumbers are essential. Get them to work.
Right.
Well, we still got to build America, even though we're going through a pandemic that's not good. So they see, hey, trades companies are amazing, especially the residential service end of it.
Right.
But what they do to these companies is they come in and invest money. They invest into marketing. They invest into branding. They invest into training and systems and processes. Instead of bringing in a VC company, why not just get some money and invest in all this yourself and watch yourself grow?
Well, think about it for a second. What happened to the mom and pop stores when a Walmart opens up?
Oh, yeah. They normally fall by the wayside.
Right?
Yeah.
So if you do it yourself and you have the ability to do it, number one, you make more profit. Because when you sold that business, it sounded great and you got a chunk of money. But if you look on the long term, how much money?
Right.
they're making, they didn't do it because they like you. They didn't do it because they want to be nice to you. They did it because they looked at their numbers and so that your business is worth a lot more. So imagine if you invest a little bit in it. The problem is this. When I first started my first business, I was bootstrapping everything.
Oh, yeah, I did too.
And it's like you're going from one day to the next, one day to the next. And I pay this bill here and I pay this bill. Until we learn to build that corporate credit, when we have it available to us, it relieves us. It makes us focus more. It gives us, allows us to spend a little bit more on that advertisement or on that social media. I don't know what to do with social media, but I can hire somebody to do it, and they're going to reach a lot more people, and my business grows,
You bet.
and I make more profit. So yes, it gives you the ability to be independent. It gives you the ability not to worry too much. It gives you the ability not to leave your business because you're struggling every day, and you let those companies come and buy you out. And you know what? That personal touch, I remember I lived in my house for 35 years. You know I had the same plumbers, right?
Oh, yeah.
You know I had the same electricians, right? You build a relationship in there and it becomes important. But then if that plumber can't compete, if that electrician can't compete, because there is lack of funds, because they didn't have the liquidity to do it, I lost too as a consumer. And so it's important for us to help the trades grow and not have the big companies dominate everything.
Now, when you're starting off your personal credit, it's easy. People start mailing you stuff. You know, do you want another credit card? Do you want more money? What do you want? We got it. What do you want? Just tell us what you want. What does a company need to do to start building corporate credit? I mean, you know, when you go to a bank, like you said, you walked in, you've got your P&L, you got your bank statements, you've got your Social Security reports for the last 5 years. Is it a lot of hard work, and is it hard to do to start building your corporate credit?
Yes and no again. If we try to do it ourselves without guidance, it's tough because the information is not there.
Right.
It's like somebody's holding back on us.
Yeah, I mean, most of us didn't even know it was there.
Right. And when we heard about it, we go on YouTube, we go online, we go search, and you have a lot of information in there that is not correct.
No, wait, YouTube's pretty good now.
YouTube is good. It's some of the information they put in there is not the right
information out there too.
Yes.
I know.
I mean, I sat down there and I saw a list of 10 credit cards that report to business credit bureaus. And I look at them, there's only 2 of them that do. So when people go and listen to it and do it, now they're spending money and they're doing it and they're paying, they're charging and paying, and it's not doing anything in there. So what's the first step to do? Number 1 is to build the company's credibility from your address to your phone number to the different things, and there is multiple factors in there. You set the foundation. After you do that, you make sure your company is actually being tracked by those business credit bureaus. See, in our personal credit, it happened automatically.
Right.
In business, they don't track you unless you do something that comes to their attention and you're registered with them. So you have to make sure you do that first. And then when you go to build credit, you got to build it in stages. See, my first credit card was a JCPenney card, $350. And to the eyes of the credit companies, I had excellent credit for $350.
Absolutely.
And then I had $5,000. Then I had $20,000. So in corporate credit, you need to build it one step at a time, one stage at a time. You can't go and get something right here in the beginning when you can do it here. So you got to start with small stuff and grow. Now, some businesses have been in business for a while. And some businesses, if you have good personal credit, it helps you. Because in the beginning, you're going to get business credit cards. And when they say business credit card, that doesn't mean it's on the business. That means it's on the business and us. That means they actually looked at our FICO score.
Right.
And if our FICO score is good, it makes it easier to move. If our FICO score is not good, it takes a little bit longer, but It's imperative for us to do it because we don't have any choice. But you can do it even if your personal credit is not that great.
So, and I know this from starting with you, the credit cards that I was using
Yep.
were not being reported at corporate at all. All mine were personal. And they were getting reported at personal. That's why my personal credit looks amazing.
Right. Right.
Like I said, almost 800 points. So I'm like, I'm doing good there. But literally corporate credit, you start over at the very beginning. You take baby steps.
Yes. But when you take baby steps, you're not taking them for a lifetime or a year or two.
Right. No.
You're taking it for a couple of months, and then you move to the next level, and you take another couple of months, and then you move to the next level. And it's like climbing the stairs, one step at a time. But you see yourself progressing. And you know there is a light at the end of the tunnel. See, if you go right now to a financial institution and say, I want a loan, I want a line of credit on my EIN, they look at you like you crazy.
No, not now. They won't. They'll look at me and say, okay, you can get about $500.
Right. Then,
just saying, because I know I'm
Right.
still in the beginning steps. We're still moving it along.
right. But then as you build it up and you go to a financial institution and that financial institution says, no, you get a personally guarantee. You have other options. I was sitting, I spoke at an event in Phoenix, Arizona. And I was speaking to a group of business people. And one of them came to me, he says, I just talked to my banker. I have a line of credit with them. And I said, why? I've had that line of credit for 18 years. Why am I still personally guaranteeing? He says, well, that's our policy. So he looks at me, he says, you're telling me I can do this? I said, pull your wallet.
Yeah.
He pulled his wallet. I said, how many credit cards you have in your wallet right now from your local bank? He looks, he says, none. I said, you had choices because you had good credit.
Right.
When you have good corporate credit, you have choices. If somebody tells you you get a personally guarantee, there's 5 others that tell you that you don't. If somebody tells you we're going to give you 50,000 and you deserve more, there's 5 others that are going to say we're going to give you 75 and 100. If somebody tells you this is the interest rate and you know that your credit is really good, you should get less, there is 5 others that want to give you less. You have options that you didn't think you had. So now you have the freedom to pick and choose where you go. But yes, you got to go back and take baby steps. I remember my first business credit card. I started a brand new company, and they gave me $1,000. 8 months later, it was $20,000. 8 months, it was $20,000. You have to build it one step at a time.
Absolutely.
I went from business credit to a corporate card. I went from buying my car on my name and my social to buying it on my company. And I'm talking that's in less than a couple of years.
And the interest rate's normally lower on corporate, is it not?
It depends.
Okay.
In certain things, corporate might be half a point less. In certain things, it might be half a point more. It depends what it is and what type of loan and the situation. Because as we know, financial institutions keep changing things.
Yeah, it varies from day to day.
You go to a financial institution and you apply for a loan and they tell you we're going to approve you, but you decided not to take it. A month later, you go to ask for the same loan. They change their policy. They say no.
Yeah, you don't meet the standards anymore.
So it varies, but it's very close. Think about it for a second. When you have good credit, you get the best rates. When you have good corporate credit, you get the best rates, no matter what they are. 4 years ago, your mortgage was 3%. What is it now?
Too much.
So things change, but you're still getting the best rates, wherever they are.
Right. You said that you spoke in Phoenix the other day, and I saw you speak in Vegas, and I've seen you speak in Chicago and Dallas, and I've seen you speak around the country. How many entrepreneurs come up to you and say, look, I'm doing it all right. My corporate credit's amazing.
And I ask them this question a lot. And I say, what is your corporate credit? What is your business credit score?
Right.
And they tell me 600, 700. And I know when they tell me that they're talking actually about their personal credit.
Bet.
See, business credit, corporate credit is a different scale. It's from 0 to 100. And you want to be at 80 plus. There's another credit score now. SBSS, small business one. which now they're utilizing a little bit different, and it's a different scale. So a lot of them come to me and say, I'm all set, and say, let's look at it. And we give them a chance. We actually look at their companies and tell them where they're at. And then they can look at it and see. And most of them don't have any business credit. I had the 54-year-old company. They've had loans. They had SBA loans. They have business credit. They bought equipment. They didn't have any corporate credit. 95% of all their transaction was not being reported. So they only see 53-year-old company. Who needs us? Who needs to build that corporate credit? From the startup to $100 million company, $200 million company, because they don't know. I didn't know, Roger. You didn't know about it. And think about it. How many us don't know?
Mm-hmm. No, and I've since I've met you, I've talked to multiple plumbing company owners. And it's like, hey, do you have corporate credit set up or anything like that? And they're like, I don't even know what you're talking about. So it blows my mind that more entrepreneurs don't know about it. And of course, that's why I wanted you to come on here and talk about it. Do you have very many people that come in to see if you can help them and you look at it and say, no, you've been doing it right. Everything's good?
Very few, but we do tell them when they do. Some of them, we tell them they need to tweak some things to even make it better. I mean, think about it for a second. You have a $5 million company that's spending about $2 million a year on their expenses.
Right.
And they have a line of credit of $200,000 or $300,000.
That's scary.
Now, that sounds like a lot for a small business, but if you're doing that much, it doesn't do much for you. We actually had a company that was a $2.4 million company when they were spending over $100,000 on their business credit card every month. And they pay it every month, like most of us do in business.
You bet.
When we looked at their credit recommendation was $10,000. It was sickening to look at it.
And how big was this company?
2.4 million. But even forget the 2.4 million. They spend over 100,000 every month. That's 1.2 million a year.
Oh, yeah. And pay it off every month.
Too bad. That business credit card was one of the 90% that do not report. Now, we had another company I can show that did about 400,000 a year. And they had a credit of 235,000. What is the difference? It's simple. Nobody knew what this company was doing. Every transaction they did in the other company, the $400,000 company, was being reported. How did they do that? They had guidance. I wish I had guidance at age 23. Because if I knew then what I know now, whoever's watching out there, you would be filling in one of my gas stations. Too bad I didn't know that.
Right.
And you know what? It's a matter of survival sometimes. It's a matter of how can we grow. Some of us own a business and we want to transition it to our kids. Think about it for a sec. You built a relationship. You have credit with the banks. You have all that. And now you decided to retire and you want your son or daughter to take over. Okay, they go to the bank. Nobody knows them. Unless you personally guarantee for them, they're not going to give them credit because they're brand new, right?
Right, absolutely.
You're sitting on the beach somewhere and you're worried if your kid messed up because you're going to lose everything.
Yeah, because you personally guaranteed it.
Right. But if it's on the EIN, it stays with the EIN. So we can go retire. We can go enjoy ourselves and not worry because our kids are in that same company and it's still the same EIN and still have that credit. It's amazing what's available to us, and we didn't know about it. That's one of the reasons I go and speak all across the country, because people need to know this. And you've heard me talk. You've heard me how I'm very passionate about it.
Absolutely.
Because it would have made a difference for me. It's time to make a difference for the people that are working right now, that are struggling every day. Those plumbers, those electricians, HVC, those construction companies, those truckers. That's what this country is built on. It's time to pay back and let them get what they deserve.
I asked you earlier, how hard is it to get started? I mean, what does somebody need to know? Do they need all their tax returns? Do they need,
No,
10
no.
10 years of tax returns and P&Ls and everything else? What's it take for somebody to
For
get started?
everybody's that's listening right now, text 26786, text credit 24, and we're going to send you some info, give you some advice on what to do, so how to start up, and we even will give you some more info if you have any questions, answer your questions. Again, text to 26786, type credit 24, one word,
Okay.
and we'll get you that info.
What's the hardest thing about building corporate credit?
It's a mindset thing. See, all our life, we've been programmed that this is the way things work. It's hard for us to change that. I had so many people that tell me, but that's not how it works. Agreed. That's how they taught us. Making a decision. Just making a decision. And started taking this first baby step. It's not that complicated. I know some of you are sitting out there and say, I don't have time to do this. Text to the number I put out there and get some info, and you'll see how easy it is to start doing it. It's not rocket science. It's just knowing the right information and doing the right steps.
And really, I mean, it's just like anything else. If you don't know what you're doing, you don't know what to do. And it was so mind-blowing to me that I knew nothing about it. That just literally blew my mind. I've been in business for, 10 years.
Right.
Never even heard of corporate credit. Never understood how really, and it is pretty easy to do. Right. It's just doing the right things in the right order. And it, like you said, it's the foundation. You're building upon it.
Right.
It's just like that $350 JCPenney credit card.
Right. That's the start.
If you treat it right and you take care of it and you baby that account and make sure it's paid on time each and every month, well, that can turn into a $10,000 Visa card that you can spend anywhere, not just at JCPenney's.
Right.
And it's knowing or learning who reports, who doesn't, how they report, different things like that.
And what step you take next.
Right.
You can't go ahead. You can't skip steps in there. I'll tell you what, you do the right way. You do it step by step by step. In 12 months, you have corporate credit. If not less, depending on what you're spending every month and how you're doing it in there. But if you do what we ask you to do, step by step by step, 12 months, you will be there. And some people ask me, so how much money would I get? Well, it depends on your business.
Right.
How much money do you need? How much money are you spending every month? If you're spending $50,000, it's different than you spending $10,000 on your business. But your needs are not the same. If you're spending $50,000 and you have this much expenses, you need more than the person that's spending $10,000. Now, can you build that borrowing power? Yes, you can. But that's another time we can talk about.
When a young person is starting out, they go open up a company.
Right.
My business account is still at a credit union. And it's because that's a credit union I started at when I was in high school.
Right.
So I've had an account there for 50 years about. Almost 50 years. Does it matter in the beginning where you set up your accounts, or is there any place that may be better for you in the long run, or not really?
In the beginning, no. But you got to set it up the right way. So if you do the right step in the beginning, and I'm talking about your business credibility,
right.
It's the minor stuff. If you do them right, you go open a bank account. You're going to open a business bank account.
Because you open it with your EIN. They always ask for that. The letter from Secretary of State. They want everything.
Absolutely.
Are you a legit business? That's why we do things right.
Right.
Yes.
And then slowly you build it up. Now, your bank account in the beginning is not as important. You build a relationship. I'll tell you what, credit unions are amazing in trying to help businesses.
Oh, I love my
and
people. At my
especially
credit union.
at the beginning. So yes, I'm more in favor of local, regional banks, getting to know them in the beginning, because you get a personally guarantee in the beginning. There is no question about it. So build the relationship. Why not build it with the person next door? Why not build it with the person that you have coffee with in the morning or see them in church on Sunday? So it's okay to do that. As you grow, you start building other relationships. But in the beginning, no, it's okay. And you can keep that account. I mean, you've had it for years. You stay with it for years. One of my companies, I have an account with a local bank that has 5 branches. And I have a business account with one of the national ones also.
Right. And we've started doing that too.
Yeah, because each one gives you a set of things that do. The local one doesn't have some of the stuff that I need in electronic and stuff in there. But I walk in there, everybody knows me.
Right.
When you go to that big one, you're a number.
You're just another number.
Right. So building that relationship, building that credibility is part of the journey that you take in building corporate credit.
Okay, so tell everybody again who you are and how they can get in touch with you.
Ramzi Sarkis, we help businesses build their corporate credit so they can get the funds they need when they need them, mostly with no personal guarantees. Company is Onyx Corporate Solutions. You can find us on Instagram at Onyx Corporate Solutions. And if you text to 26786, text credit 24, one word, you will get some info that can help you. And if you need more information, you can actually set up a free consultation with us. It's exciting, Roger, to know that the heart of what this country is all about is getting help. And it's important and exciting for me to see somebody like you sitting and talking about this, because it's information we never had, and it's time we give it to everybody. I'm excited about it.
Well, I think it's great because I'm serious. I have talked to companies that are doing 35 million a year, companies that are doing 50 to 75 million a year. And I asked them about corporate credit, and they're like, "No, it's on so-and-so Social Security."
Roger,
And
the
it blows my
largest
mind.
company I worked with was 450 million.
This video is sponsored by High Level. We've partnered up with High Level because we believe this is the best all-in-one sales and marketing platform to help you grow your business. For your 30-day free trial, go to gohighlevel.com/Roger Wakefield.
It's not just about us. It's also the middle companies, the mid-sized companies are the same. The big boys always know what to do. Wall Street always
you had one
know
at
what
450 million didn't know what to do, so,
right,
so
but
they don't always.
That's not a big boy compared
Well,
compared
when
to
you're a
us,
plumbing
to me
company,
and
it
you.
is.
To me and you, yes. But see, we work with a startup that just started. And we work with $1 million, the $500,000, the $5 million, the $20 million. We work with a brand new company. And like I said, the oldest company I helped was 53 years old. Amazing. It's a wide range. And everybody needs to know that. And you know what? If you do one thing today, after you hear this, if you do one thing, is start thinking about it, get some more info, that's a good start.
Yeah, because I did. I mean,
Yeah.
you know, I don't take everybody's for their word when they speak on stage. I
Right.
start doing research and look
Right.
at stuff, and it's like, man, this is legit. This is serious. And, you know, you've always been good to talk to. You to see you on stage, you can see how passionate you are. And just to know that, you know, a lot of small companies, they want to grow. They're like, man, if I just had more money, if I could get more money. And, you know, I remember, you know, we used to run all our credit cards through Square. And I remember Square sending me a message when they said, look, if you want 50 grand, we'll give it to you. Just basically just sign this piece of paper. We know who you are.
Right.
We're going to deduct it at, 15% of every credit card transaction you do till it's paid off.
Right.
we were able to bring that in, go buy new tools, spend a little bit more money on marketing. We were able to do a lot of things that these VC groups are doing. They come in, they throw money in a company and say, let's help you grow. Let's help you do things the way the big boys are doing it.
Right.
And corporate credit can allow someone to do that without having to sell their soul, without having to sell most of the company.
Or the thing that you spend years putting your heart and blood and
that's why I
soul
said your soul. It's all
it.
right there.
You know, going back to what happened with Square. Why did Square come to you and say, I want to give you money? Because Square could see
Absolutely
what's coming in and what's happening.
Yeah.
Now, flip that idea to what you're spending on. If you can make them see the credit bureaus, the business credit bureaus, guess what?
They'll do the same thing.
You build some. Now, if you do it in a system that works, you get there much faster.
No, I love that because, I mean, literally, and you're right, Square could look and say, you're bringing in $60,000 a month. Why wouldn't we loan you 50?
Right.
I mean,
right.
We're going to get it back 15% at a time. So what they're going to get back $9,000 a month. It gets paid off pretty quick.
Yes. And you build credibility. Now flip it on all the other stuff you do. See, if Square didn't know, they would not offer you.
Absolutely.
They don't know who you are.
Yeah, I could call them begging and be like, yeah, you're your SOL.
Right. So think about it. You're spending money every day in business.
Mm-hmm.
Why don't we utilize what you're spending, that you're doing it anyway, to help you build that corporate credit? It's a no-brainer.
It is.
Just, we didn't know. Now you know. You have no excuse.
Well, and I've got to tell you, just from going through, starting out with you, looking at what all it is, it's like, it's very easy steps. It's not difficult. I mean, sometimes some of it's time consuming. You got to sit down and fill out applications or reports or sign up or whatever. But to see what result you bring at the end of, I'm going to say the end of the day, but it's the end of the year.
Right.
And here we are coming up the beginning of 2025. Right. I mean, the beginning of 2026, somebody could have $100,000 in corporate credit or $1 million in corporate credit, depending on how much money they spend.
Right.
Then you may not get to $1 million in a year, but if your spending habits are what they are and you're doing things right and you're using the right steps, systems, processes, I love the fact that, you know, talking to you, it's like, well, Roger, these are the people that report. All these people that you're using don't.
Right.
And it's like, well, why am I using them? So I don't know. That's your question.
And it's not just that. These ones that report, this is what they're looking for.
Right.
So before you even knock on the door, you
need
know
this,
if
this,
you
and
fit.
this done. Yes.
Yes, you know. It's like you know the score before you go in and play the game.
And that was something you talked about one time about a loan. You said, look, we know what they want for the loan before you ever walk in the door. And I mean, I guess now I know what it's like to walk in personally and know I'm going to get approved for this truck. It doesn't matter. I can buy any vehicle I want. I know I'm going to get approved. Personal credit is great. Corporate credit, though, it's like you walk in. I mean, because when you need it, it's like, man, what if? What if I don't get this? What if we don't get approved? What are we going to do? But to know what they're looking for and know, look, I've done these things right. You know what score they're looking for? I've got that. Right. You know what history they're looking for? I've got that. It makes it make sense.
It's a no-brainer. You're winning. You know exactly how to win. I bought a car this year. I walked to the dealership, negotiated the price, and I asked them, which business credit reporting agency you pull your credit from? They told me. It's okay. I said, when we finalized the deal, I said, put it on the EIN. They said, okay. They started asking me questions about my EIN, the address, and all that stuff. Then they said, what's your social? I said, why?
I love that.
They said, well, because most people don't qualify on their corporation. which is true, by the way. And the reason is because they don't know they can build it.
Right.
So I said, it's okay, just pull the EIN credit. They said, well, let's take the social anyway and the other info because this way we save time. I said, no, can I say this word? Can you pull the damn EIN credit?
Right.
And they did. And it was approved. 4.9%, by the way. Because that was the best rate they had for that vehicle. And you know what? They didn't do my social. They didn't do anything with my credit. And it didn't matter if my credit was good or bad. Mine is good, but it didn't matter if it was good or bad. It's the EIN.
Right.
How many plumbers need new trucks?
Oh, yeah.
I was talking to a plumbing company in Florida that has 15 trucks. He says, how do you buy your trucks? He said, I buy them on the business. I said, oh, okay. He says, yeah, I put it all in the business. I said, did you have to put your credit? Oh, yeah, I have personal credit, good personal credit. I had to co-sign for it. Basically, I'm personally guaranteeing
then it's not on your business.
That's not on your business. Yes, the title is there, but it's not.
Yeah, your business name's on it, but your personal credit's on it.
Right.
Man, that's rough.
It is rough. Now, the amazing thing, and we didn't talk about it, and I want to go back to it, is on those business credit cards that we have, the top 2 credit cards in the U.S. for business do not report to business credit bureaus. One of them reports to your personal, which means that when we charge that big charge, and if it hits the cutoff, our credit starts becoming like a seesaw in there. Now, the funny part is 90% of these accounts don't report. The good news. The bad news, almost 100% report. I had one, I was looking at a business credit report for a company, and there's a guy that paid over $1 million on his loan. He paid already on time over $1 million on his loan. On the business credit report, it showed 15-day late one time.
Again, Ramzi, this has been great.
Thank you, Roger.
Anybody who wants to find out any more information, text credit24 to 26786. Credit24 to 26786. If you've got a business and you're not, I'm just going to say you're crazy. It's an opportunity that's out there. It's a tool that's out there to help you do your business better. So I do appreciate it. What's the name of the company again?
Onyx Corporate Solutions.
Fantastic. Ramzi, this has been great. Thank you so much.
Thank you, Roger. I appreciate what you're doing for all the tradespeople out there. You're amazing. I'm going to copy your hairdo.
Yeah, we're getting close.
Thank you.
Thank you, sir.